useful clues about future movements. So these two assumptions from the foundation of technical analysis and explain why analysts spend so much time studying charts and historical data. So these two assumptions form the foundation of technical analysis. And the important advantage of technical analysis is that it is not heavily dependent on financial accounting statements. This is useful because while financial statements are important, they come with several limitations. So financial statements have several limitations, especially from an investor's perspective. Okay, firstly, financial statements often lack the specific information needed by a stock analyst. Financial reports like income statement or balance sheet are designed primarily for general reporting, not for predicting stock price movements. They tell us what has already happened in a firm, but they may not provide enough forward-looking insight. For instance, they don't always capture market sentiment or investors' expectations or short-term stock price dynamics. Technical analysts instead focus directly on price and trading volume, which reflect a real-time market behavior. Second, accounting standards allow flexibilities, making comparisons difficult. Under accounting rules, such as GAAP, the companies have some directions or rules in how they report certain items. For instance, firms can choose different methods for depreciation and amortizations, or they have some flexibilities allowed by GAAP standard to value their inventory or how to recognize their revenues. And this means that two companies with similar underlying performance might report a different financial result, simply because they use different accounting methods. As a result, comparing firms becomes complicated, difficult, and sometimes misleading. So technical analysis avoids this issue by focusing on market data, not the accounting data, which is standardized and not affected by accounting choices. And thirdly, non-quantifiable factors are not captured in financial statements. Many important factors on stock prices cannot easily be measured or recorded in accounting reports. For instance, the accounting reports does not consider investors' sentiment or management reputation, say market psychology, or political or economic expectation. Say these factors can have a strong impact on market prices, but they do not appear in financial statements. So technical analysis indirectly capture these factors because all of them are reflected in price movements and trading patterns. To sum up, technical analysis has an advantage because it avoids the limitations of accounting data. So instead of relying on potentially incomplete or inconsistent or backward-looking financial statements, it focuses on market behavior itself, which incorporates both a quantitative and the qualitative data. And another important advantage is that technical analysis focuses on market behavior rather than theoretical valuation models. Fundamental analysis often require detailed financial information or complex valuation models and forecasts about future economic conditions. So when the new information comes to the market, it takes time to adjust their valuation models. On the other hand, technical traders can respond to those new information more quickly than fundamental investors, because they just need to look at the price or volume movements, which is the reaction, the response of the stock to those new information. On the other hand, the fundamentalists should revise their valuation models, their numbers applied in their expectations. So unlike fundamental analysis, technical analysis mainly use market-generated data, such as price and volume. Because of this, technical analysis can sometimes react more quickly to changing market conditions. So for instance, say if investors suddenly become pessimistic about a company, the stock price may fall immediately, even before the company's financial statements reflect those changes. And technical analysts would observe the price decline and potentially adjust their investment positions accordingly. On the other hand, fundamentalists should revise their numbers, revise their complex valuation models, so they react more quite slowly. Therefore, some investors believe technical analysis provide a more timely view of market sentiment. While I personally do not strongly believe in technical analysis, I think it does offer several practical advantages beyond what is covered in our textbook. Excuse me. By now, you probably realize that in investment, there is no single correct answer. What I'm introducing to you are different theories, strategies, and perspectives. It's ultimately up to you to decide what to believe and to develop your own investment philosophy and your investment strategy. With that in mind, let's look at some practical advantages of technical analysis. Say, technical analysis is very flexible. It can be applied to almost any financial market, including a stock or bonds or commodities like gold and silver, and currencies, exchange rate, and even to cryptocurrencies, Bitcoin. So this wide applicability makes it a versatile tool for many types of investors. So second, it can be used across different time horizons. Some traders analyze charts that span several years, while some others can focus on very short time frames, such as minutes or hours.